It's a part of, the holiday type trading. Okay. But they were, I don't know, NASDAQ was down, the Dow was up. Not much happening. I mean, I wouldn't put any real weight into whatever happened today. Okay. Because again, it's really a non-event from a trading standpoint. And certainly there wasn't a lot of participation. You've got, obviously moderate volumes. Yeah, I'm sure. Listen, oil is going to Pluto. It's never coming down again. Okay. I mean, this is, and March oil, I think, is whatever. I forget already, but whatever it is. I mean, look, when you're dealing in the world of March oil was 83. Okay, that's the right one. Okay. I mean, what can I tell you? Look at the move. Okay. That's your wonderful energy policy. What do you say, Marin? That we have. Okay. And look, that's what we got. Okay. Now certainly it's kind of dumb. Just based on, you always have to ask yourself the question, at what cost does all this stuff cost, and what benefit do we gain? Okay. And first of all, as we've talked about a number of times, none of this stuff will be ready for 10 or 15 or 20 years. So should we pay for it now so that they can later kick the can down the road once again? I mean, this is always the issue that we deal with. Okay, is, as long as I can remember, governments, okay, have never been for the people. And I don't care what side of the aisle you sit on. Okay, they're always taking from us. So in the meantime, it's the question of, doing the right thing for you, for the money that you have, for the money you want, and, for what you're trying to get done. But, I mean, markets themselves, I mean, there's a lot of things going on that are not what you would call, I think, great. Okay. Costs are going through the roof. Okay. And just about everything. Okay. And, and the input cost for those things is going even faster. So there's a good chance that this inflation has only just begun. Okay. Not that it's going to be, not that it's kind of starting. This may be the very beginning. Okay. And of course, that's not a surprise. Now we can go directly to the party in charge right now, because they are destroying the United States of America as we know it. Okay. I mean, and all with an agenda of getting UBI, Universal Basic Income. Okay. Now you can disagree, not a problem. Listen, a lot of people disagree with me. It's not an issue, but I think there's no other reason that you would take all small business and basically put them out of business. Okay. Unless you had a general agenda, okay, of doing something that was not in the public's best interest. Okay. And I think that's what you're seeing. Okay. And again, could I be wrong? Of course I could be wrong. Okay. But it doesn't appear that way to me when I look at small business closing down one after another. If they're still open, if they survive the entire pandemic. Okay. But in the meantime, again, markets, they're kind of, if you look at them just from a straight, without any information, they're still, up near their highs. I mean, it's not like we've had this dramatic this dramatic sell-off. It's not like we've totally fallen apart. Okay. Now it may feel like it, but you have to weigh, where is money going to go? Okay. I think that's always something that you have to remember. Okay. Where is money going to go? Okay. And, right now, I mean, where else can it go? I mean, that you put it in your mattress and it loses value every day. Okay. Obviously the crypto world, but that's been under pressure. And, in history, the most secure, biggest return year over year is the stock market. So until something changes that direction, and it will, listen, we all know, am I calling them? I don't call market crashes. I know it will crash. Okay. I know we will see the same thing we've seen a number of times in the past in history, but I'm not calling it today. Look, I mean, our positions, we're half long, half short. Okay. I would never, to me, it would be irresponsible of me to call for a market crash or a market collapse. I think that's just dumb. Okay. I mean, not that I don't necessarily believe that it can happen, but I'm certainly not going to put people in a position that they should be short, okay, into a market that's going up every day. Okay. I think we all make the mistake of trying to be, Mr. Hecht is here. What's up, brother?
How are you?
I'm good. How are you?
I'm good. All good. I'm listening intently to what you have to say.
I just think that we all have a tendency to try to think we're going to miss something if the market goes the other direction. And I think that's the fallacy, and that's the flaw in most people's thinking, okay, is that they're going to actually miss the next big move. Because trust me, and again, I can prove it and I can guarantee it, that every big move in history, okay, has been giving you an opportunity either after the move had started or right before it, giving you a signal based on the price action. What do you say to that, sir?
I agree. Patience and perseverance. You have to stick to a program, and you have to just, kind of religiously stick to that program. And you're right. All big trends, all major trends have given plenty of opportunities to get in and to get out. And, you have to have patience and perseverance. And where we get in trouble is when we allow our emotional impulses to seek immediate gratification. And that's a mistake. And, it's something we have to fight ourselves. I know you fight yourself with it. I certainly fight myself with it all the time, by investing and trading. But I just remember those two things, patience and perseverance. And that's what separates winners from losers.
So I got an interesting email today, which is right up your wheelhouse. Okay. I just got my anhydrous bill for next spring's corn planting, and it has gone up 400%. The anhydrous ammonia bill will be more per acre than any other corn crop input, including seed. Probably more than all others combined. It's crazy, probably cheaper to bury a fish with each seed. Okay. Says all farmers use anhydrous as an annual fertilizer before planting most of the spring. I suspect corn acres will be heading down, and corn prices will be heading up.
I mean, I agree 100%. And if you look at the price, and I was looking at this weekend because I wrote some articles about some of the, the ABCD companies, the grain companies, Archer Daniels. If you look at a chart of Archer Daniels, Midland, ADM, and Bunge, Archer Daniels, these are fertilizer, they have fertilizer production. That's an all-time high in the stock. They're making a lot of money because they dominate, the supplies in these agricultural commodities. And, you also look, a lot of the petroleum companies are involved in fertilizers. So, It's not a surprise. It's inflation. Their input prices are going up. It's not that they're price gouging. It's that it's costing them more. But there's a lot of money flowing into this ag sector, and that's going to continue. And the prices will go up because they have to. Otherwise, as that email said, they're just going to plant less, or they're not going to plant at all because they're going to lose money unless the prices go up and can keep up with their input prices. And that's why, Bubba, inflation is such a vicious enemy, because it's not like you could just turn on interest rates and raise interest rates and stop these input prices from going down, from going up. You need to address all of the factors. And one of the big factors is wage inflation, because we can't get people to work. So we have to pay more. And so inflation is a very difficult beast to tame once it gets out of the can. And anyone who thinks that whether the Fed raises 50 basis points or 25 basis points, whatever they do in March and April and May, they're behind the curve, well behind the curve. And prices are going to continue to go up for many reasons, not just because of interest rates. That's not the golden key.
They should have raised rates 5 years ago. They should have.
They should have raised rates, in the summer after they did, summer of 2022 when commodity prices started to show up. But you know what? Government moves like a snail, and they're way behind the curve. We're going to have negative interest rates for as far as the eyes can see.
Okay, so that's what I was going to ask you next. So at what rate, at what Fed funds rate does it go from negative rates to positive rates? Right
now, if you want to use CPI and PPI, about 8%. And if you want to use the excluding food and energy, 5.5%, which is what? Let's see, 5.5% divided by 0.25. That's 22 rate hikes.
Yeah. And of course
that ain't happening.
And those numbers aren't even anywhere close to accurate either. So
right, I'm just using.
No, I know. I get. Look, you have the benchmark to use.
I'm using the benchmarks. That's it. And you're right. It's probably more like 35 or 40. Right. So they're going to remain behind the curve, and add on top of all this the geopolitics, which are problematic. U.S. and Russia, and NATO and Russia, big problem now. U.S. and China, big problem now. U.S. and North Korea, big problem now. U.S. and Iran, big problem. There's a lot of issues out there. And by the way, divisiveness in the U.S., which is going to be my bitch for today.
Okay.
When we get there, that's another problem that, Lincoln said, what did he say? A house divided cannot stand alone.
Right. Right. And we're in the middle of division intentionally, I believe. Okay. But anyways, somebody just commented, what in the heck did they think was going to happen when they pumped all that cash into the economy for payroll protection program and all the other COVID responses? And I agree. I mean, I don't think any of those programs, first of all, I don't think we should ever shut down. That's my first story. But my second is of course what they think was going to happen. All they're really doing is robbing from the middle class to give back. I mean, what else did you expect was going to happen from that?
Nothing, because we knew at the time, look, like I said, had they turned it off and went the other way in the summer of 2020, the situation wouldn't be as bad now. But we've had how many months of 120 billion in debt purchases, zero interest rates, and government stimulus in the trillions. It doesn't matter that this Build Back program ain't passing. How much have we already poured in? I mean, trillions and trillions. We have a $29+ trillion deficit, debt, national debt.
Right.
And we're not the only ones. Europe has it, and everyone in the world. Fiat currencies, all we're seeing is that fiat currencies are going down in value, but no one sees it because everyone they look at the dollar index. Dollar looks strong. It's all BS. It's not strong. You got to measure it against how much it costs to live.
Right.
Operate a business.
None of it's right. It is all, as they say, a mirage.
Yeah. It's a mirage. It's a mirage that's purposely set up that way so as not to cause panic and allow the government to have control.
All right, now I got one question and it's time for your bitch, but your brother lives in Australia, okay? And I was reading over the weekend that COVID hospitalizations are higher for those that are vaccinated. Those are not vaxxed. What
Yeah,
does he
by the
say?
way,
Or what do you think?
they just ended the quarantine, the travel restrictions. And actually, my two nephews who live in and work in New York City, and my niece who works for the UN in Tel Aviv, they, as soon as it was lifted, they got on planes and went to see their parents who they haven't seen in 2 years. So they lifted the state restrictions, and they lifted the travel restrictions as long as you're vaccinated. But you're right about the vaccines. The problem is that science, it takes a long time to get the data to really understand the effect of a drug or a vaccine or something like that. And we've rushed this dramatically. So it's no surprise that, there's unintended consequences here. We're not going to really know for years down the road what the side effects and what the ramifications of all these vaccines are, and what we don't even know if they're really effective right now. So
Okay, and last one more.
science moves slowly. I mean, don't you agree?
Yeah, no, listen, look, I don't believe in the mandate. Okay. I
No,
mean,
neither do I.
I am vaccinated. I am boosted. I got it all. Okay. I got the World's Fair, but I don't think that I don't think you should have to, if that's your choice. I think that's one of the problems. And somebody said, fortunately, I make less than 400,000, so my taxes won't go up. Is that like our joke of the day?
That's the joke of the day, because you know what? How much is that 400,000 worth? Whatever you make, it's worth a hell of a lot less than it was a year or two ago.
Right. Andy didn't give us bitch yet, but he's going to give it to you right now, Connie. Go for it.
So it's divisiveness. Listen, today is MLK Day. Markets are closed. Grew up in a very mixed neighborhood, Jewish, Irish, Italian, Black, Puerto Rican, in Brooklyn. When I was in school, we didn't see people based on their religion, their color, their ethnicity. But today, everything is everything is very divided. And as I said, Lincoln said, a house divided can't stand on its own. Putin's stature in the world. Putin is a very smart guy. I mean, he's an autocrat, and his goal is to put back together the old Soviet Union, no question about that. And, he will slay anyone who stands in his way, as we've seen with the opposition and the poisonings and all that kind of stuff. He's not a good guy, but he's a KGB agent who's very, very smart. No one can doubt his intelligence or his wily nature. And what he sees is division in the United States. And we've been the antithesis of what the Soviet Union was for many, many decades, since the end of World War II, and even before that, when Stalin was the leader. And, when Brezhnev, who came after Stalin, was the leader, at the end of his rule, before he passed, they would prop him up to wave to an audience. They would prop him up, and it was the people in the background, the old school communists who really ran the government. And I look at our president now as a Brezhnev. He's like a Brezhnev, and as a student of history and geopolitics, Putin sees it too. And that's why he's pushing the Ukraine button, because control of those Black Sea ports and the wheat and all of that is very important. He wants NATO out of his backyard, and he's going to get his way. I don't think there'll be a war. The media, chances of war. I don't think there'll be a war. I think there'll be U.S. capitulation under this administration, which is very dangerous for the long term for Europe and everyone else. So, and it's all coming because we are so divided as a nation. We can't stand strongly. And, we need I don't see it on the horizon, but I would love a great leader to emerge for the U.S. and for the world. But I don't see it. I just don't see it right now. And what we have is very divisive. The speech that was given last week in Atlanta was a horrendous speech, in my opinion. And it's not because I'm a Democrat or a Republican or an independent or anything. What it did was it divided. It said, you're either, Martin Luther King or you're George Wallace or you're, what did he say? He said, you're either Bull Connor or you're, someone who brings someone together. It did not. He was supposed to, he said that he wants to unify across parties and work together. And what it's gone into, because of a couple of defeats on some of his packages and all, he's angry. And he's angry and he's dividing this country. And the country went into his administration divided, and it's only getting worse. And this is the true danger for us and for the world.
And I agree with that. I listen, they've been dividing the country they've been trying for a while, and they are now somewhat succeeding. Okay.
Well, a lot of people are getting very fed up when crime is out of control. Listen, inflation's affecting our pocketbooks. Crime is affecting our daily lives. And these are all symptoms and side effects of what's going on in this country. We got to support our police, our military, our firefighters, our public servants, and we don't. They're second-class citizens now, and
right.
And it's very, very upsetting. It's a very divisive, and the division is sowing the seeds of our own destruction, and that's what my bitch is. We have to get past this division somehow and come together as a nation and as a world, as a free world. The free world has to come together, but I don't see it.
Right. And just to comment on your don't see a great leader, there's who the hell would want to be a leader in this country the way things are going? I mean, you can't, even when President Trump was in, I mean, obviously he's still in the news every day. Okay. But who wants to take that abuse that you have to take from these imbeciles every single day? Okay.
You have to have a strong back.
I mean, and for nothing. I mean, other than, your ego, there's no money involved in it. So if you're Jamie Dimon, are you going to come and lead this country?
No. Why would you want that aggravation?
Elon Musk, right? I mean, those would be guys that would be, great leaders, but who the hell wants to take the abuse that goes along with it? I mean, this is the challenge that we've now put ourselves into. And again, this isn't just starting today, okay, or just this administration. We have seen things happening over the years, okay, and again, it always comes. Listen, I will say this again: life always comes back to two things, and one of them's always money, okay, and it comes back to the costs of what we have to do. Okay. And the inflation that we don't have, and the ridiculous Federal Reserve that doesn't know how to run or understand a market in general. Okay. They may have models, but they don't understand markets whatsoever. What do you think about that?
It's very true. And someone's commenting that China is a bigger problem, and sure they are, but it's the same ideology. It's the same autocratic control every citizen ideology that, unfortunately, because we're not together and we don't have a great leader or a potential of a great leader, it's basically rising them to the top because they're more organized. They did their homework better. They're more efficient. And if they're more efficient, that's the system that's going to dominate. And that's the problem. And it's really who's at fault. It's not China or Russia that's at fault. It's us who's at fault. It's us.
There's a couple of comments that China's a bigger problem. Okay.
They are. They're a bigger problem because they're a bigger country with more money.
And they have their 100-year plan. And this is just playing right into they're just helping expedite their plan.
Right. It's the division in this country that's basically fueling their ascent. And listen, Putin and China are very much allies these days. They see the same worldview. They really do. They're great allies today until they will vie for control of the world at some point because they have borders and they're crazy, and that's just the way politics goes. But at the end of the day, it's our divisiveness in the United States, the richest country in the world with, greatest business and innovation and all that kind of stuff. Our government is thwarting that. And our government is pitting one of us against the other, the citizenry against the other, and opening our borders where, look at what happened in Texas over the weekend, hostage, the terrorism, the potential for lots of terrorist activities, which, feeds right into what China and Russia would love. They would love nothing but a very fearful populace in the United States. And this is all very upsetting.
Listen, I agree with you all the way. It is problematic. And of course, today being MLK Day, Martin Luther King Jr., and I remember his speech. Unfortunately, I remember the assassination in 1968, and it's sad.
I remember it as well, Bubba. And you know what? I think that Martin Luther King, no one knows for sure, but if he was living today, he would be very upset with the division that's come. I mean, a lot of his dreams have been recognized, but he is not the kind of person, as he would not want to erase history. Or
no,
we learn from history. We don't want to erase history. That's what Russia and China do. They erase history.
Right.
So how are we better than them?
Right. No, listen, I mean, he would not be happy at all with what's going on here. This is basically what's been going on for the last, I don't know, few years has been everything that he is against.
Yeah.
Okay. So anyways, now that I'm depressed, we can look at some markets. So you mentioned the dollar, and of course, we are short dollars now, and they have broken down through that 95.50 level. And I mean, we know, I think one of the things that everybody needs to understand is that this number is really meaningless. Okay, as Andy said earlier, it is really what is your buying power and what can you buy?
Right. And you know what? The dollar index and the dollar versus the euro and other currencies is always a function of interest rates. That's the big thing. However, we have the chance for big divergence here because if U.S. interest rates are going to stay negative, as we talked about at the beginning of this session, the pregame, we talked about the fact that, how many interest rate hikes is it going to take to get us to positive interest rates? The bottom line is that the dollar is in the toilet. It's horrible.
Right.
And Europe, a dollar euro. This is, to me, I trend following, I'm all for it, with the currencies and all that. But when I look at the dollar index, and you say to me, Andy, what is the dollar index at 95, whatever, 90, where is it today? 95, 24 and a half. What does that mean to you? It means nothing.
Right.
Nothing.
Right, because they don't go very far anyways. What's the difference?
Right, and well, it just measures the dollar, or it's a vacuum. This measures the dollar in a vacuum. Measure the dollar against commodities, measure the dollar against stocks, measure it against real estate. That's what tells you what the value of the currency is.
Right. And to go one step further, the fiat currency system itself was only a way for central banks around the globe to hide everything and for governments to take more advantage of the population
and to manipulate.
And so in the meantime, 94.50, 95.50 kind. And of course, the euro currency, which you just mentioned, of course, it is a mirror image of the dollar, which we are actually long at this time. But again, I mean, basically, it is not whether you're long or short, it is what is the value of what it buys for you. And again, if you've been to the store recently, if you can find any goods on the shelves, which is becoming a problem as well. Okay. But the euro, I mean, listen, I'm still convinced that it's going below par again. But in the meantime, we are long, and I would say probably 113.75 support up to 115.
See, the mirage, Bubba, is that the euro today is worth a hell of a lot less than when it was below par.
Yes, it is.
Right.
You're 100%. You couldn't be more correct. Okay. You could not be more right. And you know what's amazing? there's nothing is ever simple, but there is a very easy solution for many of the problems that we suffer from. And I'm going to skip ahead and come back to the ones I missed, but I want to talk about this crude oil. Okay. I mean, if we would go back to fracking and shale producing, we would recover and make up for a lot of the ill wills that are going on in this country.
You're right. And it would be better than 25 rate hikes because you'd put the price of oil back between $40 and $50 a barrel. Fertilizer costs would go down. Individual budgets would be in much better shape. Production costs for other commodities would go down. But it's not heading that way, Bubba. It's going for triple digits.
Oh, no, it's definitely going higher.
And by the way, I think, and this is not a call, but I would not be surprised to see crude oil move above the 2008 high at 147. I
agree. Unfortunately, I have to agree. Okay, I've said it a number of times on some of my calls, and again, obviously parts of it are just due to the less value of the dollar, but again, this energy policy is as dumb as you can get, and only because you have to always weigh in at what cost are you giving up everything. And right now, with the I think it's almost the world's design to have universal basic income or socialism or communism, whatever you want to call it. Okay, I think that's why you're seeing some of the things that are going on.
What we have done is we have handed on a golden platter or a silver platter or whatever you like to call it, control of the oil price to two people out of 7.8 billion, Vladimir Putin and Prince Mohammed bin Salman.
Two good friends of ours.
And what do you think they want? Where do you think they want the price?
1,000.
Right.
Listen, the Saudi Arabian index hit record highs, of course, because of oil. I mean, look, this is criminal. What's
$80 a barrel balances their budget. Everything else is gravy, and they love gravy.
Yeah, I don't blame them. Anyways, Connie, 82 to 85, but we're long, and I mean, I don't see any relief in sight from my point of view.
And by the way, Brent crude is approaching a real important technical breakout level. And the other thing that you got to keep in mind is that the geopolitics really, if there's going to be a price spike, it ain't going to be on the downside. It'll be higher. But the Brent is really coming up to that 2018 high, which is a gateway to $100 a barrel oil.
No, it's scary and it's sad. And it was 82 to 85, Connie. And back to Bitcoin. Well, I mean, look, it's been, as Andy has said numerous times, it goes up big on some news or some excitement, and then it kind of dribbles its way back down. I mean, we're still short Bitcoin, but as I look at it here, it does look like it could be finding a potential bottom around here.
It is doing. Listen, it's doing some nice basing action so far early in 2022, and it's really a function of speculation versus regulation. Those are the two things that could drive the price. But right now, if we sit around here, the longer we sit around here, I'd say the healthier it is.
I agree. And I think probably 40,000, you're probably 40 to 46,000 support and resistance. True. And again, to me, I am a believer. Okay. I don't own much, but I am a believer. I do think that it's going to be a real play here. And I think it's going to be real currency. That's just the way I see it. I cannot see free people eventually not saying, screw this, I'm getting involved here, because they can't take the thievery that goes on by the governments and the Federal Reserve every day, or the central banks. It doesn't have to be the Fed. They're all crap. Okay.
Hey, and it's also, listen, more than that, it's the evolution of a technological revolution that finally hit finance, belatedly. We all benefit from technology, but the status quo, which is governments and financial institutions, have, stood against the technology evolution, and cryptos are just.
Take me back to the 60s.
Yeah, well, it's just
I don't like all this technology. Too many ways they can steal from me. Okay. And too many ways and too many spam, too much thievery on the internet, for example.
Well, don't worry about it, because if we do get into a real battle with Russia or China, and they take down our electrical grid, technology will be gone.
And they will take it down too. Cocoa, as you stated a couple of weeks ago, it looked like it was the worst performer in 21. And
The softs, yeah. And usually the worst to the best, and it kind of seems like it's following. That $3,000 level is critical, and I think we could see it up there.
yeah, I mean, well, we're long, so it's all good. And cotton making new highs. I mean, we're getting ready to take the next. I mean, this is again the actual cost of cotton that goes into your blue jeans is minimal, but the fact that the prices are running, and it's funny because I did, believe it or not, with Melissa Francis and Larry Kudlow back in, I think, 2012, I did a hit on cotton because they were, cotton's going up, the prices are going to go crazy.
Yeah, $227 a pound.
I go, this is ridiculous. It's got nothing to do with the cost. It's the inflation cost, and it's the advertising cost, and it's the profit coming that the companies need to make. They get a green light to raise prices, even though their actual effect is minimal.
Right, but you also have, it's like your farmer friend who talked about the fertilizer cost. Yep. Cost of growing cotton is a lot more now.
No, I get it now. I get it. Right. You're 100% right. But, and I know that at the first whiff of a higher price in any product, okay, they're going to raise the retail at the end.
Oh, absolutely.
They're not waiting. Okay.
Absolutely.
You think that now, to me, oil is the fairest, or gasoline is the fairest, even though it's not fair, but it's the fairest because they go up and down. Okay. But when you go to Starbucks, they never go down. When you go to get a pair of blue jeans, they don't go down. Okay, right. They steady. Okay, so to me, I believe that they always say, well, the gas stations don't raise their price until they're out. And I go, yeah, bullshit. They're making that extra money on the first bit while it's still in the ground. Okay. Yeah. In the meantime, cotton, listen, I would not be surprised to see it get to 122 now. I mean, we're long, and it based. And remember, we talked about this when it happened. It was going to make a big move one way or the other. Well, guess what?
Yeah, by the way, 122 could get you 135 quick.
Yep, exactly. And gold, look, this is the most torturous market. I got to clean this up. Let me get rid of all this crap. I gotta start over.
No, but it's really, I mean, it's like 1800's been a magnet. I wrote something about gold before we came on the air, and I'll probably put it out there later this week. That based on the last 20 years. Price action remains in a long-term bullish trend. I mean, I know we don't trade long-term trends, we trade short-term trends. Yeah. But, the price action, consolidation, digestion of a new all-time high, not bad.
Listen, you want to get really technical, okay, which I don't, but you want to get really technical. This is formed about a 10-year cup and handle pattern.
Yeah.
Okay. Look, we're long gold right now, and I'm always net long gold in my mind. I always own it. So, but I don't, when you're buying it, we're not trading what we're buying, we're putting it away.
I'm just buying it because I don't like I'd rather have gold in my drawer than dollars in my bank.
Right. And you're putting it away. You're not you're not trading. You don't care you always care, but you don't really care what the price is day to day. What does it matter? You're not selling it.
No, it goes down, buy more. That's how I look at it.
Exactly. Yeah. But the price action in this market has been so miserable.
Yeah, it has been. It's just been choppy and ugly, and for short-term trend following, it's been a taker, not a giver.
It's been so torturous,
but if you step
back, I write about it every day,
right?
And it's hard to write,
right? But if you step back and you look at this chart since March or so, the 1800, it's been like a magnet for
100%. Here's 1800. It crosses back and forth over
back and forth and up and down and all around. And and I do like lower highs and higher lows because that's a wedge. And that wedge usually gives way to a breakout. And I have to say that when I look at fundamentals, I would say that the odds favor higher when it does break.
Oh, I listen. There's no question it's going higher.
Right. By the way, we wouldn't buy the physical if we didn't think that the odds favor higher eventually.
Right. There is no absolute no question it's going to be higher eventually. And
right.
Again, this is where people who trade and invest get it confused. Okay,
right.
Which is why if you want to be an investor in metals, you should be an owner of the physical metals.
Right.
And the traders, you trade the stocks.
And forget about the immediate gratification. That's where we get ourselves into problems.
Right.
You know, you want to buy a contract of gold, and then you stare at the screen, and then it ticks down $1. You get all nervous. That's where people get themselves into big trouble.
Is that, you know what? I didn't even know what I paid for half of my gold. Okay. And I don't even care. How's that?
Same here. And you know what? The one thing that I do know, because I've been buying it for a long time, is my average is a lot lower than the price.
Yeah.
Right.
And then of course,
do I know what it is? No, I don't even care.
1780 to 1820, Connie. That's unfortunate. It's about the same I give every week. Okay. And feeders, okay. You know, look, at the end of the day, we're still long. They're holding here and they're going to make a move. But again, I got to wonder, you know, what's going to happen. Again, I don't trade fundamentals. Okay. But I got to wonder. I got a lot of things I have to wonder about. And the first thing is obviously the input cost, because of course they got to feed these guys. That's what we call feeders.
Bingo. And that's the key.
Okay. And then of course, when they turn into fats, which were short fats, we'll get there in a minute. But when they turn into live cattle and the ones that, you know, end up getting slaughtered and go to the store. Okay. I got to wonder at what point do people not have enough money to go ahead and splurge on buying steak? Because already you buy a steak that used to be 16 ounces. Now you're getting 12 or 4 or 10 for the same price you get for 16.
Yeah. And when that happens and the price goes down, the ranchers who are facing high energy costs, high corn costs, high feed costs, they say, I can't make any money in this business, so I'm not going to produce. And then you have a shortage.
In the meantime, nothing's really changed, 160 to 164. Let me just jump to the fat cattle for a moment and I'll come back to hogs and things. But we're short this now. Why? Because it came down. Now, look, to me, it doesn't look all that bad.
No, it doesn't look bad at all.
Okay. And again, to me, this comes down to the same issue. Okay. And at some point, you know, we're very fortunate, Andy, that this year we had a very mild winter.
Yeah.
Okay. Could you imagine if we had a nasty cold winter and the cost? Because think about, you know, I got my energy bill in Chicago. Okay. And, you know, first of all, we're not there a lot. Number one. Number two, we keep the thermostats low. And number three, it's been a really mild winter. Yeah. And it was still much higher than it ever has been.
My son lives in Indiana. He said, you know, listen, it's been a couple of cold days, but nothing like last year.
So, you know, you got to wonder. In the meantime, we're still short this. And again, who knows? There's so little going on right now in many of these markets that it's really hard to get a real feel. Hogs, you know, look, hogs, we're short. Now, again, I personally believe, you know, first of all, we commented incessantly about how they were so expensive for December, and now all of a sudden they're not so expensive for February. But I do believe that the next, you know, the protein places for people to eat food are besides, you know, some of the man-made proteins, but, you know, it's beef and then hogs and chicken. So I would suspect.
By the way, if you're right about the people stop eating steaks, they will be eating pork chops.
Right. Exactly. And that's what I'm thinking. So look, we're short and again, with good reason, but I could see that we could break out from here. And this is a lot that's going to happen over the next, you know, few months and where we go and see how it trades. But in the meantime, it's scary. Okay. But if anybody cares, 77.50 to 85.
I reckon I reckon in the next couple of weeks, we'll probably be long hogs.
Steaks that are $4 are now 12. Yeah. You know what? It's amazing. I don't go out to a lot of fancy restaurants to begin with, as you know. Okay. And I certainly don't like to look at the menu because I'd like to kill myself. But I went out the other night, okay, and a steak was $98. Okay.
Which restaurant was that?
I forget the name of it. It was a nicer restaurant. I was with somebody, and it was $98. Okay, and it wasn't at a hotel.
It wasn't at the Strip?
No,
Wow.
no. I go,
Wow.
really? I mean, okay, whatever, but it's scary. Hogs, copper, okay, which we have become long copper, and
Hanging around.
it just goes back and forth. Same as, I mean, look at the moves we called for, and we're looking for breakouts. And basically, if I clean all this crap out, okay, you've got 412 or 4 to 5, okay, or you want to get more tighter, you can go from 480, okay, to 420 or so. But other than that, where are we going? I mean, again, I know you believe it's going higher, and I have no doubt that this inflation is going higher. Okay, but what are your thoughts?
I think we'll see $5.50 copper this year.
Do you? Okay, this year. Okay, I can see that.
I do.
And what is the all-time high?
489.85.
Okay, there you go.
Last May.
So again, I have no doubt that it's going to go higher, and from a charting standpoint, this is pretty bullish off the bottom here.
Yeah, I mean, the most bullish thing that I see in the copper market is that Chile, the world's biggest copper producer, elected a socialist as their president. And by the way, are they going to nationalize mines? Are they going to raise wages? They're going to raise the production costs, and the production cost is already screaming because of oil prices. So, and the demand for copper is booming because of EVs and wind turbines and all this kind of stuff. So, this market to me fundamentally is a buy on dips.
They're off the table. Again, it's just it is sad that we have to be in this position. Okay, it really is, because we don't have to be where we're at, but here we are.
And you're right. And by the way, you're right. Turn on the oil pumps in the United States, the shale pumps, and inflation won't go away, but you will go a long way, a lot further than you can go with monetary and fiscal policy to controlling it.
Right. And let me ask you a question. Where would the CPI be? Where would we be if we had $30 barrel?
I would say we would be at about 4%.
Okay. So that's a pretty healthy cut.
And I would say that core would probably be at around 4%.
Yeah.
Because the real pressure now, I think, is going to come from wages, because people are not going back to work, and they are going to demand, companies and businesses are going to have to pay a hell of a lot more for employees, and that's going to feed inflation. And that has nothing to do with energy.
What's going to happen now that all stimulus has ended? What's going to happen now?
That's a good question. But
I mean, this weekend, I think the child tax credits expired now.
Yeah, I as Tillman Fertitta, the owner of the Golden Nugget, said, people will stop putting those stimulus checks into their penny slots.
So, I mean, does that have an effect on forcing some people to go back to work? Because you and I both
people will go back to work, but I still think that the labor force needs a lot more people than the addressable market. And the bottom line is the pressure on wages is higher, and that's going to continue, and that's going to feed inflation. That's going to be the big story months from now. Oh, it's really now we have huge wage inflation, and that's going to be the big story.
Why? Because McDonald's is paying $17 an hour now?
Yeah. I mean,
and they can't get help.
When I worked at McDonald's, Bubba, when I was 16, I think I got like $2.05 an hour.
Listen, I worked at Walgreens.
And you know what? I had more purchasing power then.
I made $1.35 my first job. Mm-hmm.
I made $1. I made 75 cents for each pharmacy prescription that I delivered on my bicycle.
Coffee. We're short coffee. He's had a couple of nice moves, though. I mean, I know you and I both think it's going higher here. The trend is a little bit lower, but again, I would suggest, in my humble opinion, that one more up move and it's going to reverse. I mean, that would be my guess.
Fundamentals favored because the crop was destroyed in Brazil last year because of that frost. So there is a shortage of coffee around, of Arabica beans around, and so. That's why we're hanging around here. This is a pretty high price for coffee. But listen, we've in the big years in coffee, we've gone over $3 a pound, and
yep,
I wouldn't be surprised to see it there.
I'll be selling. Anyways, There's a novice that just email me direct, bob@bubbatrading.com, and I'll answer all your questions like that for you. In the meantime, look, to me, 240 is like this is the key. We'll see. And this trades in the middle of the night and it's thin. So lumber, which we don't trade, but again, continues to go higher. Okay. And every move, every straight spike up is meant by a little bit of consolidation before it goes up again.
It's ridiculous. Listen, the lack of liquidity just exacerbates the moves in these kinds of markets. And this is a freight trade. Will lumber eventually be lower? Of course it will. But could it come down from 2,000? Absolutely.
Listen, I get a lot of comments. It's hard to find. Qualified workers is almost impossible. Even the qualified to work at McDonald's. Okay. That's a sad story, but that's.
And you know what? There's two things: qualified and motivated workers. Because a lot of workers, they might be qualified, but they're not motivated.
Oh, they don't want to listen. Why should I work?
Right. That's it.
I mean, look, this is the problem when you want to destroy capitalism.
Yeah.
Okay? You have no incentive to be the next Elon Musk, Steve Jobs, Bill Gates, as much as I hate him, Warren Buffett. You have no incentive to be those guys. Okay.
And those guys don't want you to be, because that's the way they have the control.
Listen, I'm with you. Okay. 90 cents in high school. Oh, there you go.
By the way, when I was delivering those prescriptions, I used to be thrilled if someone gave me a quarter tip.
Right. Listen,
a quarter. I made a whole $1 for the bike ride. That was all right.
Listen, boy.
And my brother and I used to shovel snow. I'm sure you did in Chicago.
We did everything.
We did everything to make money. I will tell you, I said to my son who lives in Indiana, they got a new baby. I said, listen, do me a favor. Don't go out there and shovel your snow. Hire some kids. He said, Dad, there are no kids that knock on the doors to shovel snow.
Tell them to get a plowing service like I got.
I know. But you know what? It snowed the other day and he said, oh, I got to go out and shovel. I said, why don't you hire some kids? He goes, kids don't do that here.
No, they don't do that anymore. They got their iPhones. They're sitting at home doing nothing.
They're gaming.
We did everything. And not only that, do you know that I actually cleaned houses too?
Did you?
I mean, inside like a maid.
Really?
And not that I'm against it,
I
but
did yard work. I did yard work.
Okay. I did that too. At the Pequees. I hated that. Anyways, natural gas, we're still short. I thought it would change. It did not, but I would suspect we're one up move away, even though we didn't change up the first one. Again, it kind of found a nice little bottom here. And like I said, I'm kind of surprised on my own, but again, I don't argue. That's the difference.
This market, listen, you could validate this statement. I've never seen a market that carries out more people broke than this market. So just be careful. This one is a freak show like no others. Nothing surprises me in natural gas. Nothing.
It is a freak show, and it is crazy.
It's the one this market, they all require discipline and a plan. This one requires extra discipline.
Right. I mean, again, that's why we don't day trade it, because like I said, I have occasionally, and I will. Look, anytime there's like a news item or something huge, I will get involved. Okay. Just like when I was on the trading floor, even though I was in the OEX, if there was big news in the stock somewhere, I was running over there to go trade. Okay. Right. But I'm not trading this on a daily basis. I own it or I'm short it, but I'm not going to trade it unless there's something that's so unusual, going back to like October of 2018, whatever it was. Optionsellers.com. That was the date.
Right.
In the meantime, OJ, of course, this is right in your talk with coffee. Right.
No. And lumber. It's less.
Right. But this is Brazil, not Florida.
Right. But it's also the lack of liquidity exacerbates moves. And we looked at that because of Brazil. We said, hey, sugar and coffee had nice moves. OJ, was under some pressure. I liked it, but now, the volatility gets crazy because it's so thin. I mean, it's right up there with cotton and lumber as far as liquidity.
Right. The only thing about OJ is it trades at least a normal hour.
Right. That's true.
But, we're still long. Okay. And platinum, I mean, again, platinum, like all the others, silver, I'm going to say the same thing.
But I will say one thing, platinum also suffers from no liquidity, and that's why we don't trade it.
Right.
But at some point, and that's the reason I buy physical platinum, at some point, I don't know when, at some point, I would think in my lifetime, platinum will do a lumber.
I don't disagree with that. I think that, listen, I own a lot. I own more platinum than anything else.
Well,
I
it's
mean,
on sale 2-for-1 against gold.
I mean, to me, it's one of the biggest value places to hold. Again,
Yeah,
I'm not
it is
trading it.
in a world where there's no value, platinum offers some value.
I agree 100%. I think that's exactly what I'm looking at. I go, listen, I'm holding him anyway.
So you're a fundamentalist.
I'm not. I don't even think about that. I just know that it's a value.
Okay. No, but it's the same thing. Yeah.
Right. I mean,
but I agree. I agree 100%. You know, one of the problems with the platinum market was back in 2008, the price moved from $2,300 to like $760 in 3 months, and it destroyed the investment proposition for platinum for a lot of funds, and the liquidity dried up, and there was absolutely no liquidity, and platinum continues to suffer from that. But platinum also cleans toxins from the air, and platinum is a precious metal. It's a lot more precious than gold and palladium. There's a lot less around. It comes from Russia, comes from South Africa, and even the Russian production is just a byproduct of nickel ores. So the bottom line is there's value there. It's a great value proposition, but the price action is more than disgusting.
Yes, agreed. And sugar, okay, which we are still short. And again, to me, 1850 is the key. Now, again, I'm not saying this, this is going to have the same effect. It is interesting that sugar is going down with the price of crude oil going straight up.
Yes, that is interesting. And the other thing that's I said last week, and I'll hold to this, I like sugar as long as it can hold 17 cents. I understand we're short. That's fine. But 17 cents is really a key area for me. And if sugar holds that, I think we could see.
Hell, we can make a lot of money going down to 17 cents.
Right. And I think it could dip down to that area. But sugar is a liquid commodity, and sugar could really surprise on the upside eventually later this year.
Well, I agree. Look, I'm, you know me, I look at some of these soft commodities in the grain markets as almost bank accounts. Okay, when they get to certain prices, I'm going to buy them and I'm going to hold them until when we bought coffee in 1998 or 1999 at 40 cents. Okay, I go, if it goes to zero, it goes to zero.
Hey, by the way, I bought sugar in 1985 at 2.59 cents a pound. And I said to my boss, I was junior on the desk, the commodities option desk at Phillip Brothers. And I said to him, listen, is this thing going to go to zero? He says to me, why would I buy anything that they give away free in restaurants? Right. And I said to him, you know what? And he said, go ahead, knock yourself out. You could go buy some calls or whatever. And the position made many millions of dollars. Right. And you know what? And since he was my boss, he benefited a hell of a lot more than I did.
Yes, he did.
But
950 to 1,000 kind.
The point was, and I eventually became his boss. But the bottom line was that, just like you say, Bubba, there are prices where these things, it makes no sense to do anything.
There are prices that I could be theoretically short in my trading account, but I'm buying them somewhere else to hold on to them like inventory. Me and the farmers, we also bought corn at $1.82, I think. Back then.
Right.
So, that was before ethanol. So I figured it was $3.
Yeah.
Silver, again, is as painful as everything else we're long. Okay. But it is, like I said, listen, it goes back to what Andy said months and months ago. These have been the tightest trading ranges in a long time in any given period of time. Yeah. Okay. So they're not doing very much. What's it going to take to get silver to move?
Well, silver, listen, you got to look at silver as a gold ETF on steroids, because when gold moves, silver will move more on a percentage basis up and down. And that's just the way it is. And when investment demand comes back to gold, if gold starts moving back towards the 2000 level, you'll see silver back around $30. Gold, these are the oldest forms of money that predate the Bible. And, people will come back to silver because they love it, because it moves. But right now, you look at the chart, you say, who cares? So
950 to 1,000, Connie. If you don't get it, let me know. 950 to 1,000.
It's doing nothing, right, Bob?
Right, no, it's
doing nothing. So who cares?
Right. Again, does it get back to $50 again?
Eventually, yeah, in our lifetime, I'm sure it will. But you know what? It's got to trade 24.50
Right.
first.
No, right. It's got to trade 23.50 first, which would
It's got to. Where is the price now? Let me look.
23.05.
Yeah, it's got to trade 23.10 before it goes to 50.
100%.
Right.
In the bond markets, this is, listen, we're short bonds, and this is
I
telling.
hate this market with a passion.
And
I think this market looks terrible to me. Doesn't mean it can't have a bounce. It looks terrible to me. And this is the perfect place for the bond market vigilantes to push.
oh yeah, they've broken down again. Now we're short, so that's fine.
I mean, this thing, did it go through I think it went through the March 2021 low, which was the support level.
Let's see here, March 21. So far down there.
Yeah, it was
a little bit higher, but again, you have to remember, you got to base in, for those who don't understand, bonds, when they roll from one quarter to the next quarter, because they're part of the triple witching cycle, with interest rates at this rate, the next quarter is always lower.
Right.
Okay. So it's hard to get a great gauge. Yes, listen, the 10-year notes are what were they trading last I looked, they're about 1.8, but I'm gonna look real quick right now. I'm talking to you because it is important to understand. And of course, the inversion of the yield curves, the short-term rates are inverting, which is no big deal. Again, we have gone from the point where it really meant something to where it doesn't mean much anymore, because money is caca anyways. So
yeah, the article I sent you this morning is short TLT. Hate it.
Right. And the 10 years at 177 right now. So
yeah. I mean, how could you like it with the producer price index bumping up against 10%, the CPI at 7%? How could you like the bond market? I mean, it makes it's not just fundamental, it's technical, it's everything.
Tapering is not necessarily going to make these rates go. They've already tried to slow. The real problem is because the Fed is really not independent, although they're supposed to be. They are doing exactly what they said they were going to do at Jekyll Island, steal all the money.
Right, okay. but the bond market vigilantes are they're going to hand them a sandwich that they don't want to eat.
They've been waiting for this for a long time.
Yes.
Okay. And
they got the wind behind their sails here.
They are, since they're not so private, even though they're a private corporation, okay, they're really run by the government, and the government, okay, can't really afford that much rate to go much higher either because of the debt service.
Yeah, and I think that, by the way, I think that the first level of real important support in the bond market doesn't come into play until like 135. And that's a massive move. Actually,
you know what? As I look back, I mean, Connie, for tonight, okay, we're going to be sellers, but 155, 153. Okay. 153 support, but I'm not a buyer. Right? I hate bonds anyways. I never.
You agree with that at the 135 level? Okay,
I do.
Yeah. That's where real support is, and that's where I think the vigilantes can get it down to.
Listen, they can get this market cranking. It's not the. It's not the bond market you and I knew as traders on the floor.
And by the way, it's just the same move. Remember in March 2020, they took it up to 200. They took it up to 200.
I know. And then, do you remember? Wait. Do you remember when they got rid of the 30 because they didn't need it anymore?
Yeah. We need 100.
What can you explain? Bond vigilantes are bond sellers. They want higher interest rates. Okay.
Right.
They would probably fall either libertarian or Republican.
Right. But they're more than that, because what they are is they're anti-Fed. So they want to basically show the Fed the error of their ways by the moves in the bond market.
Yeah, we get to the SPY. I'll explain that, sure. But yeah, so listen, the bond markets, the fixed income markets are the biggest markets in the world by 10 to 20 times every market combined.
Oh, yeah.
Okay. So you've got a lot of action. And the interesting part is the bonds used to not be so volatile. Okay.
By the way, it's also growing every day. Why? Because the debt is so high.
Right.
You got to finance it. And what do you use to finance it? It's the bond market.
The bond, right? Exactly. Listen, there's a lot of different types of bonds as well. Right. Okay, from collateralized bond. But anyways, at the end of the day, okay, these guys are going to push and push and push, and it could get very ugly, which is what creates a lot of the other issues. But so far, the markets themselves have been able to stabilize even through this. Okay.
If we are going to get a big correction in the stock market, it probably will start with a huge spike down in bonds.
Yep, I agree. Corn, Zulu, Charlie. Okay, now we are short corn at the moment. Okay, we were long pretty much all the way up, and we're just now short. Now, again, to me, it is higher prices, so I'm not as enamored at being short here. I mean, and I'm not, nor would I want to be jumping in like I would at $3. Okay, but I think the question I asked you earlier comes right on point here, is that either if they're going to most likely plant less, if these costs are so high, they're going to plant less.
$8 corn this year.
And I wouldn't be surprised whatsoever.
Right. $8 corn this year. If they're going to plant less, I mean, right now the corn bean ratio, which is what the farmers watch a lot, is favors planting corn. But the bottom line is that if they're going to plant less of both because costs are so high, forget about it. You see $8 corn easy.
Right. And of course, $5.80 to $6. I don't know if you track this or not, Connie. $5.80 to $6.
Yeah, and by the way, Bubba, you'll agree with me. We're in a very flat time of the year for corn and wheat.
Yeah.
It's the planting season is still a couple of months away.
We're still in the planning stages.
Right, we're planning. The fireplaces are roaring, or they're in Florida, the farmers now.
Right. Or in Vegas.
Or Vegas, wherever it's a little warmer, but a lot of them are in their homes, just going out. Instead of going out to do farming, they're going out to get wood to keep the fire going and stay warm. And they're watching these futures prices and trying to get a handle on it. The real action is going to start in March, April, May, June. That's when
right. And it's going to be, and we know there's a lot of troubles in Brazil now with the weather. So
yeah, we know that there's a lot of problems in Ukraine and
the wheat producing Ukraine. But actually, I didn't do beans yet. Let me do beans. I get the Ukraine in a minute because that ties into the next one. And beans, look, we're still long beans. Okay, they look okay. I mean, again, to me, if I'm looking at it, 1360 is pretty good support. I mean,
yeah.
First we were at 1250. Now we're at 1350. And again, we went over $14, which we thought would happen, and we stated that it had a very good chance to do so, and here it is.
A little too early, I guess, for the rally, but the crush spreads are still very, very big. They're pretty high, 165, I think, last I saw it. So, the bottom line is demand's pretty good.
We don't know what the corn bean ratio for 2022 is yet. They haven't planted yet.
Right now, it's with the new crop contracts, we're trading, last I looked, at 2.31 to 1. 2.31 bushels of corn for each bushel of soybean value, which is below the historic norm of 2.4 to 1, which means that farmers will favor corn, which makes sense because of ethanol prices.
Right. But of course, there's going to be a point where it's going to become a cost issue. And they're going to say, I'm not going to plant this loser to begin with. We've always had in history, the spreads that are the ratios are supposed to be at. And then, of course, they change or people say, I can't do that. And naturally, then they go that way. But we'll see. And now,
right now, based on what they should be planting oats.
Oh, no kidding. What's with wheat here, big boy? We're sure.
Yeah, I mean, listen, off season, again, same thing that we're seeing in corn and beans, a little price weakness. I mean, we're still $7.40. Where were we last year at this time? We were $1 cheaper at least.
Let's see.
Take a look.
I'm going to look it up right now. We
year.
were $1 cheaper, more than $1, about $1.50 cheaper.
Right. So you know what? I mean, you're coming in. This market could be very volatile this year based on Russia.
Well, that's my question. That's my point. Okay. Why are they so cheap? Okay. Based on what's going on here.
Because the world believes that you will have a non-military solution to this issue. That the world believes, this is what I think, the world believes that Biden will capitulate.
Okay.
That's what the wheat market is telling me. And when I look at Washington, D.C., I say I can't disagree.
Right. Okay. All right. So anyways, as from a trading standpoint, 730 to 760, we're still short, and I'm not. I don't buy if I'm short, okay, and I don't sell if I'm long. But I'll do anything on a day trade. Okay, just remember the difference.
Beans
Corn
become,
fertilizer.
just to answer the question, beans become more profitable above 2.4 to 1 on the ratio. Below 2.4, corn is more valuable. And that goes back, that's about a 5-decade in the spread. A lot of farmers look at that spread for value, but it's also the nominal price too.
Which country uses the most oil? China uses the most oil.
Oh yeah. China uses the most everything.
I mean, again, they use the most coal, they use the most oil. Listen, remember, China and India make up 36% of the world.
Right.
Okay. So even though we probably use more per capita, they use more in total.
Right. And India is rising because, that economy is growing. So as that economy grows, that has a huge potential, because I think China has about 1.8, 1.9 billion, and India is right behind them.
If wheat gets to 710, can we buy? No, you can buy when the trend changes. That's
right.
That's when you can buy.
That's exactly right. Because wheat's a volatile market. Wheat can be more volatile than corn or beans, and wheat could drop to 650 and then turn around and go to $8.
You have my permission to buy all you want at 4. Okay, at 7 you have no permission.
And I will tell you this: I very rarely make calls. It ain't getting there.
No question. Okay, all right. As we conclude part 1, any last minute comments on what we've covered so far?
Who, me?
Yeah, either me or you. I'm only two.
I thought you were asking.
Talking.
I thought you were asking our growing audience. No. I mean, the bottom line is, look, to sum up the pregame here. Today's the markets are closed pretty much. I mean, some of them are open, but most of them are closed. Expect the unexpected in these markets, because volatility causes crazy things to happen in markets, and follow the trends. Don't try to outguess what the sentiment is telling you, right, Bubba?
I agree. Listen, I can't argue with that. Okay. All right. We're going to stop this recording. We're going to get back with right now in about 2 seconds. As my girlfriend talks to me. Stop. Yes. Hi, honey. Happy MLK Day. And of course, let's get to the new recording. Okay. And record the clock. All right, what's up, everybody? For everybody who's just coming in, and we obviously have been going for a little bit over an hour already on some of the issues and some of the things and some of the markets we watch, and of course, this is the Monday Night Call, and I don't know how is investing like comedy timing. Yeah, I mean, this is we've got a lot going on, but it is Martin Luther King Day today, and the time is always right to do what is right. And listen, there wasn't many greater men than him. And again, I remember when they had the riots in Chicago in '68 at the amphitheater, and he was a great man, and I think he would be very disturbed today if he was around. Okay, so happy Martin Luther King Day. And again, it's a tragedy that we lost such a great man so early. Any thoughts there, sir?
Oh yeah, I just echo what you say. And it's a day where doesn't matter what color you are, what religion, what race, what ethnicity, we're all one. We're all humans. We all have the same organs. We all breathe the air. We all have the same requirements. And we need to get rid of this divisiveness and come together. That's what he really wanted.
Right. And unfortunately, since he was assassinated, it's only gotten worse. All right. Anyway, a great man. And what can I tell you? And of course, another man, no society ever thrived because of a large and growing class of parasites living up those who produce. Thomas Sowell. Okay. Think about that. The next time you look for a free stimulus check or you look for something, think about all that. Okay. You never thrive with as Mr. Potter said, you need a thrifty working class. So in the meantime, well, first we have to say they're our veterans, because again, veterans, public servants, you guys work for nothing, put your life on the lines, and if it wasn't for you, we wouldn't be here. Okay, and unfortunately, they're trying to rid you, which is even which is even worse.
The
Okay.
lawlessness and the military threats.
How about the looters in the
Oh, I'm just saying, that's
trains in
the
LA and in
lawlessness.
Chicago?
That's the lawlessness. So that's the police and our military. Without them, there's anarchy. Without them, there's anarchy. And with anarchy, then nothing gets achieved.
Yeah, it's an ugly picture, is all I can tell you. But thank you, as we always do, because again, it is because of you we are allowed to do what we do. And in McDonald's to slash hours by 10% due to labor shortage. Oh, we talked about that a little bit. And
By the way, Starbucks too, Bubba.
okay, but a lot of McDonald's are open 24 hours, and they're not going to be. And you know, we all forget what that does to companies in general, to profit margins. Okay, you know, the high cost of working. Now I'm not against the shorter hours. I'd like to go back to when things are open Monday through Saturday, and we were only at 2 nights a week. But you know, now everything's open all the time. But this is a problem, and it's not just McDonald's; it's every chain. I mean, I don't know how many places I've gone to. You can't go into the dining room of a fast food place because they got no help. Okay, so you can go through the drive-through, and of course you can wait in the drive-through until your next birthday. By the time you get through,
Yeah. I'd love to go back to the days where you'd leave your house, and for that hour or whatever, well, 2 hours, 3 hours, no one could contact you because you didn't have a phone or you didn't have there was certain loveliness in that simplicity, and it was very good for the mental process.
well, and that's I think one of the problems even in our children today. You know, everybody's sitting home on their phone; they don't do anything.
Immediate gratification.
Bitcoin, Ethereum continue to slide. Well, again, listen, they slide because they're technically weak right now. They slide because of economic problems. They slide because of other things. But again, no market goes straight up or straight down. There are always going to be pullbacks, and we do think that it is probably somewhere at a level that probably will hold here.
Right, and remember this. 11 years ago, Bitcoin was 5 cents. It's 41,000. Okay.
Yeah, I thought Bitcoin was paying. I mean, I thought McDonald's was paying 17. I saw some, but again, and some of them are giving away a bonus. Okay,
Yeah.
Kill me. Supply chain is the economy. Now, again, I don't know when the last time any of you have been into a store, but I have to. Unfortunately, I have to go all the time because I'm alone, and usually my wife goes shopping, and I'm seeing a lot of empty shelves. Okay, and that's a problem. There was a lot of empty shelves before Christmas, which is why the retail sales took a beating. There wasn't enough to sell. Okay. There isn't enough.
It's very hard to buy stuff. It was. Even buying online was difficult.
You know how bad it is? Here's 2 stories. Okay. I buy, as you know, I carry around a 20-ounce or 24-ounce styrofoam cup with me everywhere I go. Okay. And I used to buy them from Amazon, and I'd get them the next day. Boom, boom, bang. Now they put me in touch with a 3rd or a 4th party vendor to get them. And the cost is double what I paid Amazon. Okay. Sure. And the ginger that I use, which is on auto ship, this is the 3rd month in a row they can't ship. They don't have it.
Unbelievable. Okay.
So you tell me. And of course, the GDP forecast then take a dive after. Well, look, what would you expect? Okay. Who's going to produce? We got no workers. We have 11 million open jobs.
But input prices are through the roof. What do you expect?
Yeah. Exactly. At what point would our country's economy be labeled as a recession? Not now. And now we're thriving, according to the geniuses. Okay. I could make a case that we're in recessionary times now. Okay. I mean, I could make the case from a pure dollars and cents, what your buying power is. You may be making more money, but your buying power is nowhere near what it was.
It's the classic definition of stagflation.
So this is
inflation, right? Yeah, you're stagnating, your money's worth less, and everything is a lot more. And the money and the prices are going up faster than your wages.
We are threatening the Jimmy Carter era here.
No, we're in it. Well, I don't think we're threatening. I think we're
but I mean, wait till interest rates get crazy, which they could. They may be forced to, which is a bigger. Listen, I don't want to make it negative. Okay, basically we're half and half anyway. So we're not. And I'm still a believer in the equity markets. I just know that there's, in 44 years, is there's always a point in time where it throws in the towel for a while and everybody panics and pukes, and that's the way it goes.
And where else is the money going to go? It's still Tina. I mean, the bonds are still, interest rates are still, even though we think they could go to 135, it's still historically low.
The low, they're negative.
Right.
I mean,
Well,
in real dollars, yeah, no, 100%.
Yeah.
I mean, that's what continues to fuel the market, because people buy into that bullshit that the markets yield a dividend of about 3.5% a year. Okay, but that's fine, except that your principal is at risk. Okay.
Yeah,
but hey,
I'll tell you, the Fed will be ridiculous if they don't raise by 50 basis points in March. And everyone will say, oh my God, 50 basis points. Until they stop and realize how high inflation is, 50 basis point is a drop in the bucket.
Right, 100%. 100%. Used car prices are crazy here too. I couldn't even.
Today, Bill Ackman said that the Fed really needs to get aggressive and do 50 basis points. That'll send a message to the markets, which means he's probably short. To me, I was like, I laughed at that. I said, 50 basis point. What a joke. They got to do 500.
Right, exactly. Okay. But the used cars are nuts. Okay. In fact, I shipped too many cars to Vegas and I short a car in Chicago. So I had to buy a car. I got lucky because I looked forever and couldn't find, and I found one I stole, but it was by accident.
Oh my God. And you know what? I'm waiting. My lease is up soon. And the value of my car is like double what my lease value is.
Right.
So I buy it and I sell it, and then I'll go lease another.
Right. Hey.
Ridiculous. There's great arbitrage opportunities.
The life of a trader, baby.
Yeah.
And of course, everything starts with our words of wisdom from Connie. All things are difficult before they are easy. Look, she always has the right words at the right time. And I just say that, listen, if it were easy, if staying home and making no money, getting a stimulus check was easy, then everybody would do it. But there are those that want to survive and want to do better than just exist.
And the converse of that is true too, because all things tend to be easy before they get difficult. So keeping a balance is so important.
If somebody got their catalytic converter stolen, well, there's a lot of valuable metals in that catalytic converter.
Not the platinum. They could throw that out.
And of course, her new category, the State of the Union. I knew you love this one. I have yet to see the person wearing a Build Back Better hat.
I like that.
I knew you would. I know he's one of your favorites.
I like that one.
And of course, I've been bitching for an hour and a half, but I get one more, and this is the destruction of our freedom. Okay, I hope you guys, I hope everybody, not you guys, but I hope everybody wakes up for the next election. And again, I'm not a Republican or a Democrat. I am a libertarian, but I do know one thing for sure, that whenever you have one party, whichever
I'll be
one
back
is,
in a minute, Bubba.
all right, and when you have whatever you have one party in total control, it is never good. Okay, that I can say with certainty. And we have no checks and balances, and I just hope that we don't lose too much more, because if you don't think you've given up a lot, you keep giving it up every single day. They keep taking from us. In the meantime, back to the markets. Okay. And we'll always start with the Dow, Yankee Michael, which is just, we use the Dow future. It's just a cleaner indicator. Look, at the end of the day, okay, we're still long the Dow. Okay. Which, as I told you, we're split. And I'm not like, my God, bearish here. I mean, look, do I think there's going to be a big sell? Yeah, someday there will be a big sell. Okay. And when? Nobody knows the answer to that. Okay. And right now, there is really not even that many indicators or warning signs yet, but they'll show up, and you will have plenty of thing. Okay. You will have plenty of time to react to what's going to happen. Okay. If I'm right and we get another, and I'm saying that, and I don't know when, it could be 5 years from now, there's going to be another big haircut, like a 50%. Okay. That's inevitable. But again, is it tomorrow? I don't know. Is it 6 months from now? I don't know. But it's not going to be all at once. Okay. Especially, 1987 can never happen again. Do we understand that? Because of the circuit breakers, because of the limits, that can never happen again at one time. Okay. And all that's done is giving cooler heads time to prevail. In the meantime, 35.5 to 36.5. Okay. And again, I mean, I'm not thrilled to be a buyer, but I would be a buyer, and I will trade it either side when we're day trading together. Okay. And the S&P Echo Sierra. Look, we're still long the S&P. It looks like gold. It's stuck in a range. Okay. But these tighter ranges, all these tighter ranges tell you is that there's a much bigger move coming. Okay. Which way, we don't know yet. And certainly you can start to see this start to come into, which tells us that, look, we're going to see 4,800 or we're going to see 4,575. Okay. We're long. So my guess is we're going higher. Okay. And certainly nothing is done here to violate what that is telling me. Okay. The NASDAQ, November, Quebec. Well, we said a couple of weeks ago, okay, this would be a spot that you would take a shot from a buy just on a pure technical trade for support. And it did make a big bounce. And now we are now short, and it now looks like it could be breaking down. Now, this could be the first block in many. Now, again, this doesn't mean we're going down tomorrow. This is always what you have to remember. Okay. But the NASDAQ itself could be the first warning sign, as it was in 2001 after the big internet bubble of the 90s. Okay. But in the meantime, we are short, and I would be looking at probably 15.7 to be on the more conservative side as a spot to sell, although 15.6 will probably hold. Okay. And the next support is probably 15.4. Okay. Now, again, I am not a buyer other than in a day trade, and I don't even trade it that much during the day because it's so volatile and so expensive that I just choose to stand by. Okay. But I do understand it, and I do recognize it. And of course, the Russell, which was the weakest, then became the strongest, is now by far the weakest once again. Okay. And we are short this. And from here, I would say that, 2,100 to 2,200. Okay. But because I do think this 2,140 is getting taken out. Okay. 2,100 to 2,200. Okay. And the VIX, which is interesting in its own right, because it continues to go lower. Okay. Yes, we had a little bit of a rounding bottom, but look at where we are. Okay. I'm from when I first started trading, the average daily VIX was over 30. Okay. So now, and again, that's due to the hours in trading, the 24-hour basically, and you can bet this too. Eventually, you'll be going 24/7, just like every other market. Okay. These markets will be open 24/7 too. You can count on it. But the VIX is weak. And again, it was a pure sign, last week when they were trying to sell and the VIX was going up. Okay. So is the VIX broken? Yeah, it's not broken. Okay. It's what it is. It's determining the number of options being bought to open versus sold to open. I write about it every week for Trader. Okay. And call buying is always number one. Okay. And now this week you had more put selling and more bull put spread selling, which means there's more selling to open, which is why volatility is falling, which is telling you that they believe that the markets are still bullish. Okay. Now, is it or not? I don't look at it. I'm just using the information that I have. I am not making a prediction from there or not, but I can tell you this one thing to always remember. Okay. No matter what the options are doing. Okay. And this is where those scam artists with the most active options, the trade off of that bullshit. Remember this. Okay. You'd never know what is the other side of that trade. Okay. And typically the reason that call buying is 52 weeks a year, the number one strategy, is because many times people are creating synthetic puts. Okay. They're using a short stock and a long call to make a put. Okay. Anyways, Apple, Alpha, Papa, Lima. Okay. And of course, we are still long Apple. It's really doesn't look great. Okay. I think that, again, it had a beautiful move up to 182 and now it's kind of settling. But I would say that 170 is probably pretty key. Now they get earnings, I think, next week. Okay. So I wouldn't be rushing to do anything here. I mean, we're going to always have a position in our portfolio because we don't ever change. We change only in direction, not on we don't care about earnings. And more often than not, we're right in direction on earnings anyways, because the price action will usually tell you. But really, you're in a consolidation, 170, first 176 resistance, and then up to 180. Okay. AG, which we have in one portfolio and we are short. Okay. Again, I don't, this is here, other than in the portfolio, this is here for one reason. Okay. I watch this for everybody so that when it comes time and I want to buy silver, or we want to buy silver, this is one of the ways you can play it with less expenses, a little bit cheaper way to play. Okay. That's the only reason. There are certain things I only cover that I'm looking for a move to the upside. Okay. Because the benefit can be so great. And I don't typically trade them to the short side unless they're in their portfolios. Okay. But looking at this, it looks like maybe 1050 might become some support now. Okay. And $11 is still really solid resistance. So again, that's not even something I would normally want to trade, but I do personally, when I get extra bullish silver, I look for other places besides the futures market to go and get long. Okay. And this is one of the ones I use. Okay. Alpha Michael Delta. Okay. Which we are short. And I know they have earnings coming up shortly as well. But again, I would look at this, and 140 looks to be pretty solid resistance. Okay. After a huge move up to 160. Now, just again, imagine looking at that chart. Okay. Now, it certainly wouldn't surprise me, depending on when, but if it went to 144 tomorrow, I wouldn't fall out of my chair. I mean, certainly that would still be natural resistance. Okay. Right in here. As the trend continues lower, so does the resistance level at which this is going to trade. Okay. And eventually it'll reverse and break out from there. Yeah, it was a buy at 10 if you bought it. Did you buy it at 10? Okay. The AG. Okay. But it's now officially in the portfolios, and it's a short for now.
I apologize.
No worries. So here I would think.
Can I tell you why I had to leave?
Yeah.
You'll find this particularly humorous. So my mother-in-law for Christmas bought me this. You ever see a stress ball, like a squeeze ball?
Yeah.
One of those things. She must have bought it at the dollar store, because I'm sitting here, we're talking and going on, and I'm squeezing it. The thing exploded all over myself, my desk, and my keyboard.
Nice. Nice.
So I apologize. I have a good excuse.
What did you get from the dollar store, which became the $5?
Unbelievable. I was just saying. I think it's funny, actually.
So anyways, 130 to 140, okay, is probably the range. And again, you say that's a bigger range, and I say, no, it's not. Because if I show you what the expectation of movement is coming in next week, okay, or the next couple of weeks, okay, this is what you can always gauge everything off of, because this is what the markets are pricing in. Okay, they're pricing in for January 28th, a $12 move. For the rest of this week, 4 days, $8. Okay, that's the options are telling you. That's the implied price. Yeah, that's what they're expecting in movement. So when I give you a $10 range, it's not really that wide. Okay. Bravo Alpha, and I was wrong. Charlie Munger bought more. Is that correct?
He did. He more than doubled his position. So,
and of course, go ahead.
Amazing.
And we're long it anyways, but maybe the Chinese stocks are starting to recover. I don't know. I don't make those predictions. I mean, certainly, if you recall, I did say when it was down around 100 and something, I said, well, look, if you're looking for a place to gamble, that wouldn't be I could think of worse places to go. Okay. But overall, now it looks like it's found some, range, which is kind of the range we're looking at, 130 to 140, 128. Okay. And look, it doesn't look great at a longer term basis, but the trends are developed over, over days and weeks, and over the last few weeks and days, it looks pretty damn good. Okay. So again, that's just, it got nothing to do with Charlie Munger. We could care less. Okay. Bido, which we have not traded yet. And again, we carry this. This is a representation of Bitcoin, and it's a representative of the futures on Bitcoin, not a Bitcoin soup. Okay. I never recommended AMD at $10, please. And I mean, maybe 50 years ago I did, not in recent history at $10. What, are you out of your mind? $10. I mean, I actually bought NVIDIA at 15. Connie can tell you, she took the notes for that call. I don't got to share now, but anyways, so Bido is really a representation of what I'm really wanting to see here. Okay. First of all, I would say 26 to 30-ish. Okay. But what I really want to see is I want to see this cycle a couple of times, because what I really want to see is how they handle the backwardation and contango of the futures market. And I want to see what it looks like to make sure that it's being handled properly, because this is where a lot of people get hurt, because either the ETFs don't understand it or they don't care. And the reaction.
My guess is it won't be pretty.
Well, that's usually the case. That would not be a shock. So we'll see.
Right.
But it's, again, I look for other ways that you can do things that we do for less money. Okay. And of course, BitQ, which is Bitcoin soup, okay, which is ugly. Okay. And again, where's it going to stop? Nobody knows. Okay. But it obviously it looks like very much like Bitcoin, that it looks like it may be creating a bottoming pattern. I mean, we don't carry this anywhere. I do own it. And certainly I would say, probably $18. I'd be buying probably almost no matter what. And to me right now, it's probably 18 to 20, 21. Okay. Again, just look at it. From the peak at 35, it is nothing but go down. And each and every step, it's like a stair. Boom, 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 boom. Okay. So 18 to 21 would be something to watch. And I'd be looking to be a buyer at lower prices. Okay. Because I am a fan of the cryptocurrency in general. Okay. Chewy. Hey, what's going on with Chewy?
That's so ugly. I can't believe it. And by the way, I order a lot of things on Amazon. The one thing that gets here on time is the Chewy orders.
They're on time always. Yes.
I know.
We're still short this, but again, it's a great company, but this says to me there's some issues out there.
Yeah, there's issues.
I mean, because obviously, if you're ordering from Chewy, you're paying a little bit more for the convenience. Okay. But this says there's some problems out there. But in the meantime, we are short. And now 46 becomes resistance. The breakdown through the support becomes automatic resistance. Okay. And as down, we ain't seen the last time we've been in this neighborhood. You could look to 40 as a potential spot.
Yeah.
Okay. Now, again, would I buy it and hedge it? Yeah, I'd have no problem buying it because I do. Okay. But again, it is ugly. Okay. And coin, Charlie, Oscar, India, November. Now we do carry this now in our portfolios and we are short. Okay. And again, it came up, it made the big high when Bitcoin made the big high. And now this is back down to it's below the issue price, but above the original low price. Yep. Okay. But again, I would look at this at 240. Okay. 220 to 240 would be what I'd be watching. Okay. Now, even though this is a $220 stock, it will fly, okay, like Bitcoin. Okay, you can see in a very short period of time, it's dropped 50%. So, but in the meantime, 220 to 240. And again, it's the better version of a cryptocurrency because it's the bookmaker. They get paid. And of course, they do much better in a bull market because there are a lot more buyers and sellers and traders when the market is bullish. When markets get negative, okay, especially these types of markets, things start to dry up, okay? And the activity dries up because there's not so much excitement. The pets are still waiting. They're waiting for the stimulus checks. No kidding. Okay, 220 to 240. Okay, 215. Just right now it's at 219. So, or was at 290 was a low. So it's 230 right now. Curl F, which this is the last week I'm going to talk about these. Okay, I forgot to take them off, but these are just pot ETFs. We don't trade them. We have no position anywhere. They're just pot ETFs that we thought before I was proven wrong. Okay, that pot was going to be federally legalized, which Andy was of the opinion first, that they're not going to do anything until the big guys get set up, like the Altrias, the Constellation Brands, and those guys. And it appears that he is right. It looks like they burned these guys out and they've made them all burnouts. Okay. So this becomes, again, there's no reason for me to cover this. I don't even want to be gambling in here right now. There's not even a whiff that they're going to legalize these, federally legalize this. And then DraftKings, oh boy. Well, I'll tell you one thing, this did not get the reaction I thought it might get when it opened up in New York last Saturday.
Looks awful. I mean, it's what can I say? I mean,
I still own it.
I still love it, but
it looks bad.
What can I say?
No, it looks bad. Look, it's horrible. Listen, we're short in the portfolios, and we've been short. Okay, but it looks horrible. And of course, the real problem is nothing fundamentally except one thing. Okay, their acquisition cost of new customers is too big. They're too much banking on the future of big business. Okay, and when I mean big business, I mean big handles, and gambling continues to grow, but they need, because their profit margins are so slim and they're giving away so much just to get you in, it's very challenging for making any real money, which is why you're seeing this dramatic drop. Okay, in the meantime, there is no support. I mean, right now, 25 would be resistance. Okay, now I own it, but I'm just giving you straight. Okay, Fast, Foxtrot, Alpha Sierra, okay, which we no longer trade, but we are at last count, we were long. Okay, and again, I don't see any reason why that would change. I think this is 140 to 150. Okay, but probably 155. Okay, again, a lot of this will have to do with the interest rate markets and what's going on in the banks, because when interest rates go up, banks make more money. Okay, so 140 to 150, and then possibly 155. Facebook, Foxtrot, Bravo, okay, which we are long. And again, it's really 320 to 335, 336. And they've got earnings in the next week or so. Okay. So that'll go a long way. Now, again, basically, if you look at this without any sort, I don't want to reset the chart. I want to remove. Hold on. Let me do what I wanted to do. Okay. If you look at this without a bias, without any opinion, metaverse, okay, what you really have is just one giant consolidation pattern. Okay. And certainly, again, we're going to look at it from 320 or so to 340 or so, but it could go either side of that. And again, earnings this will move 4 or 5%, 6%, 7%, 10% on earnings. Let's see what they're telling us. I can tell you right now what they think it's going to do. Not which way, but how much. Okay. They're expecting about an 8% move off of earnings. Okay. Which would take you up to 352 or so, or down below 300.
You know what's interesting, Bubba?
Yeah.
10% of the cryptocurrencies in the top 40 are metaverse related.
Metaverse. I can't wait.
Maybe we'll be living in the metaverse.
I'm in the metaverse. First Solar, Foxtrot, Sierra, Lima, Romeo, which we are still short. Okay. And look, it's just stuck in a range. It's 80 to 86. Nothing to look at. 80 to 86. And GDX, Golf, Delta, X-Ray. Okay. Which we are long. Look, it's come off the bottoms, but this is not exactly the wildest trade. It can, and this is another reason for this, it can be wild if it's up. Okay. It's hard for it to be wild if it's down. What do you think to say to that?
Yeah, I mean, look, this thing, as I always say, this is gold, leveraged gold, without an expiration date. So, I like trading this thing because the miners tend to outperform on the upside, underperform on the downside. It's a great proxy for gold, and it's diversified because it holds a lot of different of the top producers. It's going to go with gold. Go with the gold, right?
Go with the gold. There's gold there. Goldman Sachs, Gulf Sierra. Now, they did not perform well on earnings.
No.
And we're still long. unfortunately, but hey, that's life in the big
One
city.
one of the things about Goldman is, the wage inflation. If workers are going to get a lot more wages on Wall Street, they're going to pay up for a lot of people.
All right.
There's a war to attract people to the financial institutions now, and everyone's paying up. And I think Jamie Dimon said it best when he said, "Look, if we have to take money out of the shareholders' pocket to get the best people, we're going to do it."
Right. Listen, they are the best company.
I think that's part of this.
Yeah. So you got 372 to 396, and of course it's part of it. I mean, they're by far the best in the industry at what they do.
Yes, they are. And they're going to pay up. They're going to pay up for people. People at a cut, they'll hire MBAs at $450,000.
They always paid up even before, but now it's going to cost them.
Now it's going to cost them a lot.
IWM and the Whiskey Michael, which we are short. And of course, it broke down. Now, again, it had a little bit of bounce on Friday, but it's breaking down. Now, we'll see. The key number here to watch is going to be around 214, 215. Okay. The upside target, 218. I'd be a seller. I'm not a buyer anywhere. I think this has got a good chance to go below 200. Okay. But again, I'm not making any predictions. I'm short right now.
Look, small caps. We know the problems small businesses are having, and this is just a reflection.
Actually, I am.
These are not your mom and pop stores. I mean, these are multi-billion-dollar companies.
Right, but they're small caps, and they get tortured.
They're at a competitive disadvantage to the trillion-dollar companies.
Right. And of course they're being dealt a bad hand.
And by the way, they're the people who really lose out when the wages go up.
Oh yeah.
Yeah.
100%.
They lose the worst.
They can't compete. In the meantime, I am long and short, just for full disclosure, right? Because I do have it in my equity portfolio. And I mean in my hedging portfolio. Mara, okay. And my expert told me last week that sell all rips. And don't buy the dip.
The rip, don't buy the dip.
So using that as my guide, but again, it's certainly in a downtrend. We actually now cover it in one of our portfolios, and we are short. Okay. And to me, this is 25 to 32. Okay. And you can say, oh, that's a big range for a $28 stock. Well, again, I can prove to you that is probably not as big a range as you think it might be, considering that in the next 10 days, it's supposed to move $5 or $6. Okay. So again, you can think it's big, but big is relative. Okay. 5 up or 5 down brings me right down to my levels. Okay. NEO, November India Oscar. We trade, we're short. Okay. Look, end of the day, it's 28 to 32. It hasn't changed in 3 weeks. Okay. And there's no reason to change it. I thought, it might be tomorrow. You could be right, sir. I thought it was Friday, but you know what? It wasn't Friday. It is tomorrow. Was it today or tomorrow? Okay, it may be tomorrow. Or Goldman Sachs earnings. But I know
it wouldn't be. It would be tomorrow because no one's going to report on MLK.
Wells was JP Morgan got clocked, even though the earnings I think were okay, and Wells Fargo was up big. So.
Wells was up big, but then again, Wells is a special case because they've been under siege.
Right. Anyways, 28 to 32. Nugget, November Uniform Golf Tango, which we are also long and back in the portfolio. And again, this is just 45, okay, to 50. Okay. And again, this is real gold on steroids. This is even bigger than GDX. And
this suffers from time value.
You have to, right. This is why we don't put this in your long-term portfolio, so you can't hedge it, because it was once 92,000 a share.
Right. This is what you call a dust collector.
Right. This is when you trade and you benefit from the trend, and then you move on and reverse it.
And I trade this, and I've never, ever, ever held a position this longer than 10 business days. That's my cutoff. No matter what happens, I have a time stop on this kind of stuff.
Right. And we're using the as long as it stays long and we're performing, we stay in it. But again, we're not in it more than, I think we might have been in it 30 days once. But again, if gold gets a big move, we're going to make a lot of money.
It's definitely not like one of these things you tuck away for the year. There's no way.
Right. You just have to remember what you're dealing with. And NVIDIA, November Victor Delta Alpha, okay, which we are still short, and it continues to work its way lower. And again, it's 260 to 280. And that's not, I mean, again, it's a great stock. They've done very well. They've split and they were over 600 now. It's coming down.
And
So,
they make great products. Those chips are very, very good. They're the gold standard for the, for the 3D animation and that kind of stuff. They're an amazing company, but hey, that stock got pretty high.
right. And Penn, well, again, this is the same. This falls in the DraftKings category, and this has even been damaged worse over time. This was like 140 at one time. In the meantime, they're going. Listen, the gambling stocks are going down right now, and new money just came in through Win, which we'll get to in a minute. But look, right now, I mean, we are short. Okay, we've been short this since I don't know 70 something. And there's no reason for me to get long now. Right now, to me,
it's fairly shocking. We've come through some big gambling events. All the football playoffs now we're in. We came through the college games, and these stocks are doing terribly.
Right. Well, when it really comes again, it comes back down to the same thing. It's lead acquisition costs, and they're just too damn high. And they need to get a much bigger handle because of the way their businesses work. In the meantime, 46 would be resistance, 48, and I'd be a seller until proven otherwise. The Qs, Quebec, and this is where we get a little bit of an issue, which can be the first warning sign, as I showed in the NASDAQ futures. Well, this is the NASDAQ, and this looks like 380-ish, 381 is resistance. We are short, okay, and I don't know. I'm not going to predict anything, but again, since we are short, I would suspect that if 376 doesn't hold, you better button up for a while. Okay. Now, again, that's quite a ways away. It's still about 10%, but I mean about 1%, but it can become a very important level, and the next level up there is going to be 372, and then you better duck if it breaks through there. Okay, but we are already short, so it's good. Riot, listen, this is another stock, another representation of crypto. It used to be when we first started trading them, just to give you everybody a background, they were both around Mara and Riot were around $6 or $7. Okay. Riot went to 80, Mara went to like 50 something. And then Mara they reversed and Mara became the outperformer. And then Mara went to 80. And now Mara's obviously 40% higher than this one. So we'll see. In the meantime, it's a representation of Bitcoin. That type of thing is 18 to 22.
These are mining companies. So you got energy prices going through the roof.
Right.
You got the cryptos going down. It's like the worst of both worlds.
Riot traded better than Mara for the first time in about 6 months. There's my genius of those two, Riot and Mara. Okay. And Roku, which we are short. Okay. And again, I mean, 180 is now new resistance. I don't know where any support is. I mean, I wouldn't be a buyer anyways, but right now, to me, if I were going to give you a number to look for, it'd be 140. Okay. I'm not going to give you a number, but 140 would be the next. If it continues at this rate, next stop is 140. Okay. The SPY, Sierra Papa Yankee, which we're still long, and 460 is obviously held and it's a key spot. And of course, it still has some upward bias. Okay. I would think you're probably 460 to 470 right now. Square Dance, Sierra Quebec, which we are still short as well. And it continues to plummet.
Another one that looks horrible.
Now, listen, it's a good company. It's not just crypto related, as people want to make you believe it is. They were a payment company before they got involved in crypto. Okay. And right now it's in a free fall. Okay. And again, what does that mean? It only means that those are warnings of what could happen in the future. Okay. With everything. Okay. And I don't want anybody to walk away from being afraid that the market's going to collapse tomorrow, because it's not. Okay? It'll go down when it goes down. You'll have plenty of time. And if you want to exit some of your positions, if you're not hedged, you'll have plenty of time to exit. Okay?
Yeah, right, exactly. And look at the action in this stock, right? So we were at 270 back in October, right?
290.
290 in August.
Right.
Right.
270.
And then there was plenty of time for the signal to change from long to short. And look at how much you captured.
Right. Exactly.
So, that's the point here.
Exactly. So, and then of course, this is the last time for Tilray as well. Okay, we were gambling on some pot stocks, looking for the federal legalization. It's apparently we're wrong. Okay, and again, I'm not telling you don't do it. I'm just saying that I can't be an influence anymore. I made my bones. I'm wrong. Okay, and I may be right eventually, but right now, if you keep trying to fight a losing position, I can guarantee you that you'll go broke. And that was a decision that we had to make in the 90s.
And it's a bet, that Washington makes a move, does something. And as we've learned, the only thing that Washington has done over the past year, they've only done one thing. They put through the infrastructure bill that had been out there for the last 8 years.
140 resistance kind. Right.
They're not going to do betting on Washington doing anything is a very low odds play.
Right. And, again, I'm just going to give you some comparison. My partner and I in the 90s were massively short, and we had to make a decision. Do we want to stay in business, or do we want to just take our losses, move on? Well, of course, naturally, we took our losses, moved on, and of course, we were right. But there's no point to fight. There'll be plenty of time to fight when it's time. Okay. Tango, Quebec, which we no longer trade. We didn't need the duplication, but look at where it's fallen to. Okay. Look at the it's not horrible, but again, you've got resistance up around 90. You got support now around 68. I mean, certainly with the NASDAQ being short, this would be short as well. And Tesla, which I don't trade at all, but it had a pretty good week, and then it got hurt. Now, and here it is, found about 1,000, which is what we thought, about 1,000 support. Again, this could move $100 in a day like nothing, but to me, it's 1,000 to 1120 right now, and then if it can break above 1120, then it's 1220. Okay, and the VXX, which again, this is one we carry. We are shorted in the portfolios, but I really have it here because I want to have the opportunity when it does go up, because when it goes up, it's going to Pluto. Okay, even if it's in a short-term basis. Okay, but right now it's 18 to 20. And we are short. And I would not be initiating a brand new short position here. Okay. If I wasn't already short, I wouldn't be selling more. Okay. I'm getting ready to make a play here as a gambling trade. Okay. And Whiskey Yankee, November, which we're still long. And they came out with, first of all, Macau. Okay. China came out with status quo for the next 10 to 15 years. Okay. Which is obviously huge for Vegas Sands and for Wynn. And I think that this over the weekend, they announced their app as well, which means they're now spreading out. And I think they're in about 6 or 7 states now, WinBet, which is what I kept saying all along. And of course, it's more competition, but it also brings more people to the business, which will help eventually DraftKings and Penn and all the others. Okay. Because the more money comes in, the bigger the handle, the more money that they make. Okay.
And then, the other thing with DraftKings and the others is if those stocks get really, really cheap, they become big takeover candidates.
Yeah, of course. And 95 should be the next resistance here. And XBI, as I said, it's going below 100. There it is. It got there. It's back above it. Sell it at 100. I'd be a seller here. I'll be honest with you. Not right here.
I want to go back and ask you a question.
Yeah.
So they paid, one of the things weighing on these stocks is the tremendous acquisition costs. But if the stock falls to a level, some other company could come in and pay very low acquisition costs,
right,
by taking them out.
Oh yeah, no,
they swallowed the loss.
No question about it, and they'll buy them out at a premium, and it'll still be a bargain for them.
Right, exactly.
Listen, it's no different than when Macquarie, which is a big brokerage firm in Australia, was buying everybody because at that time the euro was $1.60, so they were getting a discount to the dollar anyway. They didn't care. They paid anything. Okay. In the meantime, 104 is resistance here. I am not a buyer at any price. Okay. And Zoom, which we have taken out, but we were short and would still be short, obviously. Okay. To me, 170 is resistance and support. Hell, I don't know. I can't even find any support. Okay. Look at that. It goes all the way back to the pandemic. Okay. Probably 140, 130. And somebody did ask me about the SPY. Now, on the SPY, your question was regarding the weekend, but what about the weekend? That's the question. That's what I have to ask you. Anyways, Zoom, 170 resistance, kind of no support. There is obviously no support here whatsoever. Okay. But yeah, I think of 1 million into precious metals, silver, gold, platinum, gold about 250 each 2-year hold. Again, I can't give you a 2-year hold. Okay, I can give you, if you have the equity of $1 million to put into gold, silver, I would say that first of all, I'd be a scaled in buyer in case it went lower. Number one. Number two, you cannot put a time frame. The markets is not going to announce when it's going to go higher. But I assure you that when it does start to go higher, you'll have plenty of time to get in. So again, I cannot make a recommendation to do it that way. Okay. And so that would be my question. Microsoft, sure. Okay. And I'm gonna do a couple here, but I got to jump. But I mean, Microsoft looks terrible right now. I mean, it reached 344 or so, and it's falling. So to me, 300 is going to be the key number here. If it holds 300, it's probably going higher again. But again, the tech wreck has been very, very nasty. Okay. So I would be very careful. And I think somebody asked, it was about the weekend and the SPY. And to me, look at the markets no longer have weekends because they're only closed Saturday. They're open Friday till 5 o'clock Eastern or so, and they reopen Sunday. Okay, at 6 o'clock Eastern. So there is no more of the volatility effect or things over the weekend. It's already priced into the markets. There is no surprises here. So it wouldn't change my opinion. I would not, there was no trade I would make based on a weekend unless it was going to be short. Okay. And the only reason that is because the biggest down days typically come out on Monday because people have time to think about it. But now even that you've noticed has become lesser because they open Sunday night. So there's a lot less to worry about. Yeah, I can look at EMPH. Echo. Let's see what it is. Echo, November, Papa, Hotel. Okay.
And after you do that,
Wait a minute.
oh
Oh,
boy,
this look bad. Whew.
that looks real bad.
Okay. I mean, again, if you own it, I hope you're hedged it if it's hedgeable. And if you don't own it, I wouldn't be buying it yet. I mean,
No.
certainly, though, everything has a price at a point in which it becomes a buy or a sell. But right now, this has no buy, whatever.
Take a look at the XLE.
XLE, that's going to the moon last I looked.
It's outperforming all the other stocks.
Yeah, it's going to Pluto.
US Energy, yeah.
Look at that, $65. My God. Sheesh. Okay, well, again, right with oil.
Yep.
All right, kids. Thank you. You answered the last. You're welcome. My pleasure. Okay. In the meantime, look, today was a holiday, so tomorrow's volume will be distorted because it included what came in today. It's one day. If you look at your chart, it'll say the 18th on it. Okay, and all the futures. And look, just be careful. There is no reason to ever be overly aggressive here. There is no reason to take too much risk. Okay. Again, establish what your risk is, establish the best way to trade it. But in the meantime, always protect yourself, always be hedged or whatever, because that's the best way to do things because the equity markets have the best return over time. But in the meantime, everybody have a great week. Andy, thanks as always.
Thank you. See you
Have a
soon.
great week, everybody. We'll see you later.